Let's bring our guests into this conversation here now. Conrad DeQuadros, a senior economist and founding partner of RDQ Economics. I think we're supposed to have 5 hikes in interest rates, according to Zandy, this year already as well. Ethan Harris, head of global economic research at Bank of America, Merrill Lynch. Conrad, it's salt. Salt.
I think on the housing side, it clearly is salt. I mean, I have to say I'm a little bit...
How can you say that when it's Florida and it's Colorado and it's other states that have no impact on salt? What's happening in
all the rich salt people go out there.
Yeah, but that should be helping Miami. It's not. The top segment of all these industries is the worst,
that have
and the bottom is the strongest.
Property in Miami don't necessarily pay Florida taxes, though.
They pay property taxes, but I'm saying if it's all salt, to your point, then why is Miami and parts of Texas?
Ethan, do you think it's not salt?
It's not all salt, but it's partly salt. So I'm going to have to agree with you, Joe. I'm sorry, but I have to agree with you.
Thank you.
I think that this is.
You feel bad.
I think this.
You're saying you're sorry to Robert. Okay. Yeah.
I think this is a good development. What we're seeing is the normal rotation in the economy that comes late in the business cycle. The beginning of the cycle is great for the wealthy. Get huge profit gains. You get a roaring stock market. Collectibles go up in price dramatically. Late in the cycle, Joe Sixpack finally gets money. You get rising wages. The unemployment rate for minorities and low educated people goes down more than for other people. So the economy's in a natural rotation, and it's a good development, as you said, to see income distribution a little less skewed. Obviously, you know, if the stock market were to go down a lot, I'd be quite concerned, because stocks are wealth, and they are being held as a way of creating wealth and affect consumer spending. But collectibles and wine and stuff like that, to me, that just shows people have more money than they know what to do with, and it doesn't really drive the economy.
Robert, let me ask you this, too. Of things like that, I mean, we heard from Tiffany earlier today, and their sales were down because you don't see as many Chinese tourists who are here, too. I would think art would be impacted by that, some of these big auctions probably.
Absolutely. So there are 2 separate cross currents. One is that the art market was clearly impacted in the first half by the lack of Asian, particularly Chinese buyers. What's happening with Tiffany and all the luxury retailers is that China has repatriated luxury spending. So they have cut tariffs dramatically on what it costs to buy an Hermes bag or LVMH or any other luxury goods
sales were up
in China.
Yeah, their sales were up in China.
So a lot of the stores were ahead of Tiffany's. Tiffany's now catching up in putting their stores in China rather than relying on the Chinese tourists coming to New York or Paris or London. So that has actually increased sales for all the luxury companies in China to partially offset what's happening here. So to the degree you're a company that's already has a lot of stores in China, you're doing well. For now, I've been surprised at how well the luxury consumer in China, and Hong Kong's going to be the big question. Because Hong Kong is the largest market for wine, for watches, and for a lot of luxury goods. And that has yet to show up in the data, but I think it will. And it's showing up.
Mentioned Hong Kong in his comments.
It's showing up in Richemont. But here in the U.S.
If it becomes President Bernie or President Liz, we're going to look back on these halcyon days and they go, right?
Yeah, but
the salad days.
I would say I think that this foreign argument is probably part of what explain some of this salt argument on housing, and that there's probably a lot of foreign demand in places like Miami that might not be coming anymore, so that's hurting there. But one point I'd make is I think there's, generally speaking, economists focus too much on the consumer as a driver of growth. Consumer is the largest part of the economy, certainly, but it doesn't drive growth. It's the business side that drives growth. So I would be far more concerned than any pullback in spending of richer people if we start to see further declines in profit margins, which might then signal that the labor market will come under pressure, and then the larger segment of the consumer starts to come under pressure, too.
I don't think we can move away Joe's point on salt. Okay, it's inarguable. If you give relief for salt, if the president tweets right now that he's going to give consideration to relaxing salt, you're going to see the wealthy consumer engaging once again. It's going to be a benefit.
Maybe. I mean, you know.
You need to make up your mind whether you want income inequality to narrow or whether you want these rich people to just get richer and richer and richer for your beat.
I'm impartial.